Welcome back. We've got Pradip Shah, Chairman of IndAsia Fund Advisors, joining us now. Pradip, good morning. I want to get a sense from you on, how you're viewing the entire setup currently. I mean, would you say you're actually looking at markets with a lot of positivity, or would you still be a little cautious given the fact that, we've seen some major event risks behind us, but growth still does continue to be a little sluggish for now?
Yes, I think I would be cautious at this time. One great thing that's happened is the stable government that has come about with the fantastic mandate that Prime Minister Modi has got for himself. But and also the good things that have happened with the Reserve Bank. Not only have they reduced interest rates a bit, but also their focus. They've said that inflation is under control, and therefore they would also like to accommodate growth as an objective of monetary policy. I think that is a fantastic development. Going forward, I hope interest rates come down, and I wish they could have allowed these 8 banks that are still under prompt corrective action to start lending, because they're getting deposits because of the NBFC problems. People are flocking to these banks. These banks seem to have an implicit guarantee from the government and in the minds of the public, and therefore public is supporting them with deposits. So they have the ability to lend, and they should be allowed to lend to grow out of their problems. And this is where there are changes already instituted in managements of some of these banks, so that would have been wonderful. Having said that, what is unfortunately globally of concern is the unilateral initiatives of the United States on trade with Mexico, with China, with India, which hurt us. The US sanctions on Iran, they hurt us. And the inverted yield curve in the United States talks of major problems brewing in the United States. So all that cannot be ignored. We are an interconnected world, and India will be affected by that. So also, additionally, we have this monsoon issue. We have had humongous water stress last year, and that is reflected in the demand. There was growth slowdown in consumption demand also, consumer staples going down in volume. And unless the monsoon comes to our rescue alone, government spending will not help us. Government is very seized of it. I think government spending will start, and the manifesto was excellent in that regard.
Okay, so fair enough. So that's the kind of, setup that we're looking at. In light of that, what would you currently be bullish on? Where would you look for an opportunity of uncertainty or jitteriness with regards to the NBFC segment? But overall, of course, corporate banks continue to be in favor. How would you strategize within the financial basket? What's your take there?
So in the financial basket, there's going to be some unraveling of the loans to developers. The real estate developer loans are going to be in some problem. Some recognition will have to come of the losses there. Maybe the losses in the aggregate for the system as a whole will be maybe 30,000-40,000 crores over the next 2 years. So there'll have to be recognition that many of these NBFCs, which have been lending aggressively to real estate developers, and some of the banks that have lent, will have to recognize those problems. So I think in the financial sector, one has to be very selective. There are excellent banks. Everyone talks of HDFC Bank, but there are other good banks. There are other good NBFCs which are doing very good work. And so if one is selective, there will be growth opportunities. And some banks have shown that they've learned from their past mistakes and dramatically improved. And they are doing very well. The market is recognizing that. And I think they have some steam left in their growth as well as in their pricing for investors.
Good morning, Aisha as well joining in. But would you say that the market, given at how the price action yesterday was post-policy, is somewhere right in its fear of perhaps a contagion risk of the Diwan housing situation? And especially in the Q&A yesterday, when Shaktikanta Das sort of skipped any clear communication or announcement on the NBFC crisis. And we all know that, IL&FS, anything to do with liquidity, NBFC, that really spooks equity investors.
Yes, I think some people were naively expecting that the Reserve Bank would take upon itself the losses of some of these NBFCs. That Reserve Bank cannot do. Its own capital adequacy will come under strain. So we don't need that kind of response. But on the other hand, our Reserve Bank could have considered releasing these 8 banks which are under prompt corrective action. They released 3 banks in, I think, February from the total 11 that were put under prompt corrective action. And these banks can start lending. As I said, there's been change in management. They'll be therefore, and they would have learned, these new managements would have learned from the past mistakes, and then add a little bit of governance processes there through better directors on the board and chairman and so on. And there is opportunity for these banks to fill up some of the gap that was left by the NBFCs. The NBFC crisis cannot be wished away by government or RBI writing a check for the bad loans. Even in the United States, when Citibank was bailed out in 2008, first the US Treasury, Fed, FDIC and the Fed, they insisted on Citibank writing off all its reserves and capital, and then for the balance 90% of the loans, they said that they would take 90% of the losses on those identified toxic loans, but with the caveat that 10% of the losses would be borne by the bank itself. So there was skin in the game. Today, unfortunately, many of these banks feel that the problem was done in the past. We are now how to solve it, so they don't recollect as much as they possibly could. And of course, the bankruptcy processes are a bit cumbersome. You've seen that in the SR case, after 20 months, resolution has not been done because of various authorities intervening and stopping the process. We've seen in so many processes, NCLT comes in and stays things and so on. You cannot have this kind of thing. Let the process run as was identified earlier with Reserve Bank of India and so on, in 270 days turnaround. It would help the NBFC situation. It's unfortunate that this is not happening fast enough.
So Pradip, wanted to discuss this entire slowdown that we are witnessing, and that now seems to be across segments, both urban as well as rural distress, we already know, and it's always a big question mark on what's really going to be the fate of monsoons, which already seem to be a little bit delayed. But what is it that you're making of the slowdown? Because now this slowdown has lasted us a good 4 to 5 months, autos in particular, and it's spread across staples as well. And somewhere the stock prices also seem to have baked in the worst. Do you think this decline is a good opportunity for investors to maybe look at some of these names? Or would you say wait it out, wait for the green shoots to emerge and then perhaps start nibbling into any of these names?
Well, you mentioned auto. Part of the reduction in demand came because of the reduction in consumption loans because of the NBFC crisis. Banks stopped lending to all and sundry NBFCs, and the NBFCs could not on-lend for two-wheelers, four-wheelers and so on. So there was that effect, as well as the effect of the monsoons. Last year was a bad monsoon, so we clearly saw a slowdown in that growth. And now that sector is facing some more headwinds. The automobile sector, for instance, will have to comply with BS6 norms, and they have to clear out all the inventory before March 31st. So that will cause some problems. And in the long term, there is always this issue whether electric cars or hydrogen fuel cars, fuel cell based cars will come into the fore, and a lot of investment will be required for that purpose. A lot of infrastructure will be required for that purpose. So clearly there is some pause in the automotive investment thesis. One has to examine how the Indian market will develop, and we should not be surprised if the introduction of these newer ideas, electric cars and so on, happens faster than people imagine.
Well, it does seem like it. Pradip, I'm intrigued, in terms of, some of the other pockets that you're bullish on. I also noticed domestic pharma and IT. Given that they've really been lagging the market, and pharma in particular has been so bogged down by regulatory concerns, what keeps you positive on some of these pockets?
So the domestic pharma industry, which is, many Indian companies, but also some multinationals, they continue to do well. The domestic market is growing, and if people have to spend, they cannot avoid spending on medical care. But what is affecting the pharma industry is, of course, when they are export oriented, and the US FDA has become very activist and very closely scrutinizing Indian suppliers. So we've just read today morning that Natco has also got a 483, and Cadila got it the other day, and Aurobindo has got it, and so on. So they are affected because of the US supplies. So either they shape up their manufacturing regime and processes and systems so they don't have this problem, or they identify other markets. Otherwise, they will continue to face this issue of regulatory problems. And I think you cannot fault the US FDA for these regulatory problems. You have to look within. It's the companies themselves that have to do things to improve themselves.
All right, thank you so
The IT
much.
sector, by the way, is doing very well. I don't see any difficulty. Some of the companies are doing extremely well. Yeah.
Fair enough. Pradeep, thank you so much for joining us
Thank
this
you.
morning. Pleasure as always.